Good morning, everybody. We've got a mixed trade in the grain markets here early on Monday morning. It is 6:30 a.m. Central Time. December corn futures up 1 at 5.26 3/4. November soybeans down 2 cents at 12.15 3/4. December Chicago wheat up 1.5 at 7.35 December Kansas City wheat up 2 3/4 at 7.45 December spring wheat is down half a cent at 9.68 1/4. If you guys are listening on the podcast, leave me a rating or review, especially on that Apple app. If you guys are listening on the Apple Podcast app, leave me a rating or review, any sort of comment that you have. I would appreciate that. If you're watching on YouTube, hit that subscribe button, hit that like button. Help me out to grow this channel. That would be much appreciated. We hit 3,000 subscribers last week. Let's go for 5,000. That's the big picture goal. If you need some additional assistance from me, go to my website. It is www.standardgrain.com. Check out this subscription service, guys. $49.99 a month. All the grain marketing info you're ever going to need here in one package. You can cancel this at absolutely any time. No other fee, no other obligation. I will not try to sell you anything else. Give this deal a shot. We had some more flash sales of soybeans on Friday, and this is positive, and these sales are much needed. USDA reported 3 separate soybean sales on Friday: 396,000 to an unknown destination, 366,000 to an unknown, and 132,000 to China. I suppose those unknowns very well could be China. That's a one-day total of almost 855,000 metric tons. That's over 31 million bushels. That's the best day of sales, best single day of sales we've seen in quite some time. As of last week's export sales report, however, total soybean commitments for the marketing year are down 39% versus last year. So every one of these flash sales that we see here they're all desperately needed. We need to play catch up here. The pace of sales is very slow. It's not a bad program when you look at it historically. It's kind of like an average type program versus the last 10 years, but that's not what USDA is projecting. USDA on their balance sheets is telling us we're going to have a much better program versus the type of sales that we have now. They're saying we're only going to be down 7% versus last year in soybean exports this marketing year, while sales are down 39%. So you need to see these sort of soybean sales continue. There were some rumors on Friday regarding some additional soybean business. So if you do see some additional flash sales reported early this week, that would not be surprising. Now, we did have our weekly export sales report on Friday. Soybean sales for the week, 1.148 million. That was near the middle of expectations. But we sold 2.6 million the same week last year. So we're not doing what we need to be doing in terms of export sales. I'm hoping that those flash sales I discussed off the bat here were kind of the start of something better. Again, total soybean commitments down 39%. Corn sales were also kind of near the middle of the range, just over 1 million. Total corn commitments for the marketing year are still record high. They're above last year by about 4%, but that gap is narrowing because China has been largely absent from the U.S. corn market really since May. Wheat sales were strong and above the upper end of expectations at 568,000. Total wheat commitments are down 20%, but that's going to be the case when you have crop issues. Those are some of the poorest wheat export sales or commitments in the last 10 or 12 years. But when you have these sort of crop issues in the U.S. and Canada tightening supplies, that's going to be the case. September U.S. soybean crush was below expectations. NOPA was out with their report from September on Friday, 153.8 million bushels. That was the print. That was down 3.2% versus August, down 4.8% versus September of last year. Traders were expecting 155, so slightly below the expectation. Not a big shocker by any means. September is often a slow month for soybean processors here in the U.S. They wait on new crop beans, and in a year like this, when supplies were really, really tight going into harvest, it kind of exaggerated that factor. I would imagine that you see crush activity improve in the coming months. Large money managers continue to reduce length in the soybean market. This is kind of an interesting setup because funds have taken a whole bunch of length in the soybean market off the table, yet they continue to hold this like real aggressive net long position in the corn market. I've got my fund tracker chart up on my screen here for the soybean market, and I send these out to my customers as part of that subscription service every Monday morning for corn, soybeans, and wheat. Back here, this was like October of 2020 where the net long peaked at 230-something thousand contracts, and now we're down to 24,000 net long as of last Tuesday's close. So they've peeled back a ton of length. they eventually go short the market here? I'm not sure. They haven't been short the market since spring or summer of last year. So it's been a long time since fund traders have been net short the market. I would blame this action here, the fact that they've reduced length. I think the poor export sales that I've discussed have a lot to do with it. I think the fact that the U.S. crop is going to be very good has a lot to do with it. I think the fact that Brazil had a record crop last year, they're planting record acreage this year, they're catching rains here in the spring. These are all factors, but we really need to see the demand return here. Via the export front in particular. I think the processors are going to be okay. I think that part of our soybean demand is going to be good, but this export thing concerns me a little bit. And again, in corn, funds long 231,000 contracts. 218,000 contracts as of last Tuesday. So they're like glued to a net long in the corn, but they've been drastically reducing length in the soybean market. They've been on both sides of the SRW wheat market in recent weeks. Chinese pork output rose sharply in the third quarter. Calculations by Reuters based on official Chinese government data suggests a 43% year-over-year increase in pork output during the third quarter and 38% increase through the first 9 months of the year versus the same period last year. You're probably going to see expansion turn into contraction here. Financial incentives are just disappearing. Prices for pork are falling. So this is sounds good now, and I just don't know if it's going to look that good, 6 months from now. November grain options expire on Friday. These years really fly by. Another grain option expiration for November. So make sure you examine any remaining open positions that you have there. Our reports are back to normal schedule this week. Export inspections today, crop progress today, ethanol Wednesday, export sales on Thursday. The cattle market had marginal gains for the week last week. Cash sales were mostly 124 last week. Nothing surprising. That was up a little bit on the week. U.S. dollar marginally higher ahead of the cash open. We've got the S&P down about 10 points. The Dow's down 92. Precious metals off just a little bit. Bonds about flat. Crude oil very strong, up $1.24, 83.52 in the November WTI. Everybody have a great day today. I'll talk to you guys same time tomorrow.